going to get that's a top line level, okay? Then we're going to go down a little bit deeper, okay? How do we get to those financial statements, as Paul just talked about? How can we better organize our business records so that we can keep track of the day-to-day stuff to get financial statements that are meaningful and that are useful and also timely? Because if they're not timely, then they're really not useful. And then we'll look at some different functions within that area of the business, but looking at bookkeeping.
So while we're talking about sort of a high-level view about financial statements and the importance of what they come out and do, you really have to understand the internal controls and the ability to keep track of billing things and tracking your cash, in and out is extremely important. So if you aren't doing that, the financial statements aren't going to be as. So remember, the underpinnings of the financial statements are your detailed records and keeping track of that. So make sure you're getting that right first. And then the financial statements are going to really be, as Eric's going to tell your story to the people, but you got to do the basics right. So it's the processes.
We have an example of an income statement that we can take a look at. We do have the several parts here, and we picked this one because there's some detail on here that we can dig into a little bit. But first you look, and this is for the month of March 2017, for the month ended. And this one, they happen to have a comparative to the prior year. They like to look year over year, what was happening. But in the revenues, they have different streams of revenue, different areas where money comes in, and they like to break those out. So if you can think about your business, if there's different things that you should be measuring, you want to break those out. You want to classify your incomes differently. On a basic level, you might be working with commercial and residential or something like that, something along those lines, and you want to see what area is doing.
Financial statements, now we're talking about the balance sheet. And the balance sheet, this is the only of the three statements that's a point in time type of financial statement, that it's, as of month end, as of December 31st, it starts off, your cash, what's in the bank for your cash account December 31st or January 1st, January 1st. So that's what it is, but it summarizes your assets. It's sort of on the left-hand side of your balance sheet. I'll tell you, that's all your assets. That as you come down, and we'll show you the balance sheet and get through all that stuff. And then the right-hand side are your liabilities. Your assets are yours, what you own.
Accounting. Bookkeeping is more of an employee function. Okay, somebody doing that role is working for the business. They're doing the work for the business. Versus accounting is more of an owner or a management function. So they're working on the business instead of for the business. So there's, if we look at the typical business owner relationship with their financial information, especially on the smaller and even the medium-sized business, a lot of times they're only looking at this stuff once a year because eventually we all have to file and pay our taxes. And so, at the end of the year, they're pulling everything together, maybe giving it to their accountant, maybe they're doing some basic looking at it on their own. But we like to drive home that that's not enough. If you're only looking at it once a year or only putting it together to pay your taxes, you're really not looking at your information. You're not using it as a tool to grow and develop your business. If you're looking at something, in January and you see something was wrong in the numbers, last February, well, you just went a whole almost year with something being incorrect or something that could have been done differently. So that's why doing this and doing it consistently is how you can definitely turn it around and help your business grow and develop and push things in a better direction versus a
time, whether it be the quarter, the month, the year, it's for the full period of time, and it is an extremely powerful tool, and we'll see why when we get into some of the details. So on the next slide, when we start talking about some of this stuff, here's the format of it, is that there's three main sections of the statement of cash flow. The first one is the one I really focus on, and that's cash generated from operating activities. And as I said, that if you have accrual basis financial statements, and you make $1 million, well, that might not be what cash you collected. And that's why the cash from operating activities is really important. As like I said earlier,